G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So in this video, the topic we'll be going over is the Fed rate cuts again. And the moment of truth is about to happen at 4 a.m. my time, which is another basically another 10 hours or so, not even, less. So it's getting very, very close. And the crucial decision the Fed has to make between 25 basis point cut or a 50 basis point cut. And it all depends on what they've, seen in the data has occurred, the CPI numbers and the unemployment, and gives them confidence to cut even more than what they anticipated, or they hold off and just do a subtle cut just to see out any further weakness, as the economy's been pretty resilient despite unemployment starting to rise and inflation is falling, so it's meaningful. That's what the Fed want to see, but the unemployment rate remains sticky. And if that starts to take off, then they will be cutting aggressively. But at the moment, it's not in danger zone yet. So they can get away with a 50 basis point cut. But it's a mixed view. Different people suggesting 50 and 25. And it's all over the shop. Like JP Morgan predicts 50 basis point cut. Jay Diamond, like I mentioned in the other video. Then you got Ray Dalio saying 25 basis point cut will be more appropriate. And now the bank's 25 basis point seems to be the norm. The problem is the probabilities are not in favour of 25 basis point cut. They're actually shifted the other way. But you can see here on Trade Economics and the calendar, we have the Fed interest rate decision here. And the consensus forecast is 5.25%. So that is a 25 basis point cut. And that's what they're predicting. The majority of people predicting that. And that'd be 4 a.m. It'd be very crucial. See what happens. Show you the probabilities now. And they're at 61% for a 50 basis point cut and 39% for a 25 basis point cut. And so it's pretty skewed heavily to 50. But I do think 25 is what they should be doing. Not going aggressive at this stage, especially around the elections. Because they cut aggressively, it's not for a good sign. It's a bad thing. They're seeing more bad data than anticipated. But if the data that they're seeing is good in their eyes, and it suggests that you need stimulating, because the restricted policy has been going on for so long. Since July, they've had rates at 5.5%. They're pretty steady. So it's time for an adjustment, as Powell did say in the Jackson Hole Symposium. And 25 basis point seems like the go. That's what I'm predicting as well, 25 basis point. It's a nice subtle cut, not to shake up the markets too much, cause any major volatility to the downside or upside. You never know, could rally the upside, and that could result for something. I don't know. Markets are very, very unpredictable. So either 25 basis point, 50 basis point cut. I do see markets rallying upwards. Okay. The reason is NASDAQ hasn't filled its gap yet. But I could show that in the charts later on in the video. But let's go over some tweets first before we get there. And that is that. So that's the Fed rate cut probabilities. Now we have tomorrow's Fed decision will be historic. The market has never been so uncertain about a Fed interest rate decision in at least 15 years. If the Fed cuts by 25 basis points, it would mark the largest surprise seen since 2008 by a wide margin. On the other hand, if the central banks cut by 50 basis points, it would mark the largest surprise since 2009. The Fed has strived to avoid market surprises using its speeches and forward guidance since the early 2000s. Now, no matter the outcome, a significant part of the market will be disappointed. Has the Fed made a big communication error? They always do. a jawbone. They deceive. That's what the good Fed is good at. They trick people. You never know what their movements are. They're very, very unpredictable. So it's much larger uncertainty than these times, right? Between 15 to 2016, and then here, 2023. So definitely very, very uncertain times at the moment for the cuts to surprise either. So I see now. So the yellow is the 50 basis points and 25 is the red. So you can see how large that one is. It's be very, very surprising, according to this chart, that they get a 25 basis point cut, and less surprising they get a 50 basis point cut. So, yeah, it's very, very interesting how this chart suggests that. Okay, so that is that one there. And then we got this tweet by Walker. Breaking: Trump S-Coin project. World Liberty Financial announces that their S-Coin will in fact have a S-Coin token. Only 63% will be available for public sale. Please, for the love of God, study Bitcoin and ignore this S-Coin. So this is just the spaces that Trump posted on his Twitter and talk about his new token, World Liberty Financial. I did mention this on the previous video, a prior video before that, about Trump's token, and I said don't stay away from it. It's a scam. But yeah, it'll be a pump and dump, that's for sure. Extra liquidity, don't get involved. He doesn't know anything about crypto. Only his son's getting quite involved in it, but his son knows more than him. And I don't trust either. So it's just not a safe bet. Put your money, and if you got $50, $100 laying around, then go for it. But yeah, don't bet more than that. It's just a gamble. At the end of the day, you could go up or down. But yeah, it's definitely something that's a bit sketchy. So yeah, this guy's a Bitcoiner all the way through, and that's why people stick to Bitcoin, because they get a lot of coins at launch, a lot of altcoins. They don't last multiple cycles. They might get one or luckily two, and then they're gone. So altcoins come and go. Bitcoin's here to stay, as far as the consensus is concerned. We have to wait and see how long it does stay around for, because it's just a digital token. At the end of the day, Bitcoin is just it's a trustless protocol, essentially. Peer to peer, it's digital, it's not tangible, it's invisible. Okay, but it's just another invention. But we'll see if Bitcoin lasts a long time. But it's got way better chance than all the altcoins do. Okay, so this especially is not a long-term token. It's just a pump and dump. I see this predicting to be pretty bad. So don't get involved. And I did mention in the previous videos that he has launched NFTs and baseball digital cards and all that stuff. But yeah, they all haven't fared too well. So will this be any different? You tell me. So onto the charts, and we have the S&P 500 futures. So we did make a new all-time high, as you can see there. And we have a gap here. We had to fill the gap eventually, but there's no gaps higher, as obviously it's made an all-time high there. So that one there seems pretty well either topped or continue higher. Who knows? And up 0.02%. And NASDAQ here on the futures is a bit different. Has not broken its all-time high. It's down further. Okay, but if it does, it's got another roughly from that wick there, if you can see, 6% to go. So he's lagging behind the S&P 500, and does have a gap here. Okay, it needs to be filled. I'll show you on this one here. You'll see it clearly. This level here needs to be filled. Hasn't done so yet. So that's a probability, definitely. If it doesn't matter what the cut's going to be, 25 basis point or 50, I do see it filling the gap, because most of the time I do get filled. Okay, gaps It's like an itch that needs to be scratched, right? And we all have them. And this one's got to be scratched. So I do see it getting filled. Go to the upside. And, the crypto market will probably rally as well. Just following the stock market, essentially. Nothing too shabby there. And that's just based on that. But the futures are pretty flat at the current state. And they will get very volatile going into the morning here in Australia, which is the afternoon session in the US. That's it. Bitcoin on the daily, you can see we're struggling to get above this 61,000 level. We directed again. Now there's wick and there's another wick. So 2 days of wicking. Obviously, instructions here as well, but just currently, it's come up to day after day. And it'll be the rate cuts that will probably send it above it. We'll see what happens. Who knows? Or could sell off and the stock market goes up. We don't know. But we have a lot of resistance areas. Okay. So one here around 64, 65K, as you can see there. All right. So we've got to get above that to remain bullish. We do have a slightly higher low than this one. So we are sort of stalling out here on this downward sloping trend line. And you can see this low here is definitely higher than this one. But the high is lower. These ones are just forming lower highs. And this is lower high. So still downtrend. To prove otherwise. And we get a break at high levels. Okay, then boom. And then it definitively has to break these highs. Okay, and then we can say that the bull market is just about to explode, and you probably get left translated cycle, and into the end of the year, you might see a big explosion upward, but who knows? I don't think so. I don't think it'll probably get above this descending trend line. I don't think it'll get much. Probably get to this 65 level and probably go a little bit higher and then down. And something like this. And then, it'll probably, if I can draw it properly, and then where we go. And then we are going down, okay. Down, down, down. The prices are down. And then eventually down to 41K. All right. But that's what I'm seeing. Probably a fake out above, and then boom, it's all over. Or could stop here and then boom, down. Is to complete this pattern again, and then down we go for Bitcoin. So there's some upside is a possibility, and then it's like I said, it's all over. It's all over. It's all over. It's all over because Fed cuts are not generally bullish, as they're cutting for a good reason. The economy is weak. All right, so that's Bitcoin. All right, so this is the Fed funds rate and the crucial decision tomorrow morning, where they get 25 basis point down to 5.25, right? Or a 50 basis point will send us back to 5, okay, roughly. And 5.33 is the median interest rate between 5.5 to 5.25. Okay, so it'd probably be slightly below 5 if it's a 50 basis point cut, and slightly above 5 if it's a 25 basis point cut. And every time they get cuts, so we had a cut here, right, in 2019, and then eventually we had the big drop here, and that was a recession, right? So not good. This one here, the 07 to 08 crisis, it was a GFC, right? So that was recession, okay. If I overlay the stock market, you'll see. Okay, these are bearish times. So the market declined a fair bit. So not good. And it did decline here. Okay, after these initial cuts, and then these big cuts come. So cut was from 1.5 to roughly 0.65. Okay. So nearly 1. And then it just slammed right down from that level, 0.65 to basically 0. So big cuts there. And we had another recession here once after the cuts happened, 2000 to 2000, basically 2, right? After the Fed cut rates. They did cut here and here. So they did sort of slightly cut here and nothing happened. The markets just kept going. The difference here was that we didn't have the unemployment rate shooting up. Unemployment rate was reducing, was going down. So that's another thing to take into consideration. Is the unemployment rate, and now it is rising. So that's why it looks more favourable for these times, but the unemployment rate was going up, and that's comparable times for the cuts compared to these where they didn't have rising unemployment. Okay. Then here was the same in 1990, right? Around about to here, they started cutting here, and then you have a recession, okay, after the cuts, and it says dip here in price. That was a dip, nevertheless, and that was a recession. So it wasn't a huge sell-off, but yeah, we could have a very mild recession or a very bad recession like this or this. Yeah, this is a very mild one here, as you can see, very mild. So that could play out as well. All right. 84, there was no recession there. Okay, but he cut, right? But there was no recession. There was no unemployment rate rising. Okay, it was declining. And then we had in 81, 80, we had back-to-back recessions. Okay, and they slam rates. So this whole period, right? This crazy period, it went down, up, down, and the markets went down. Okay, big sell-off. The rates were going down aggressively at this pace here. Before that, we had a slamming of rates, and the markets, already sold off beforehand. And the markets kept going up, and then it sold off. So it was a bit of a weird one, a bit of zigzaggy going on here. High inflation, so that's why I was combating that. And eventually, markets did catch up to it and did correct. So the cuts were bearish eventually, and we had the 72, 73, 75-ish. That was the recession. We had an initial cut here, as you can see. The markets are already selling off. Okay, the markets did sell off beforehand. They rose because inflation took off, and the markets just freaked out. And then eventually they cut. Markets stayed down. Okay, and they did eventually rise up, but these initial cuts were bearish, and then it took off to the upside. And that was a surprise to the market, and they just hated it. Markets hated that. They hate uncertainty. All right. And surprises. This is another recession, 1970 recession, and the market's already going down, and eventually they cut meaningfully here from 9% to 7.75. So it was a 1.25%. Yes, it was 1.25%, so quite a large cut, and the markets didn't like that, and eventually sold off, as you can see there. All right, so bad. This one here in the 60s wasn't a recession, but it was another sell-off. They did cut after it, and the market was already recovering, so that was not notable. It happened before the rate cuts. That was not a recession, okay? And we had the late 50s, right? And we had a recession here into 1960, okay? Recession was here. And the Fed did cut rates around this time. The markets did sell off a little bit as the cuts went down, okay? And then we had here in the 50s, late 50s, 57s, we're looking at. So that was a recession. And they did cut, and the markets did go down a little bit, and then boom. But they were already going down before the rate cuts, okay? So the market sifted out before it happened. All right, he did have a bit of a sell-off. So there's times where it didn't work, like here. Okay, and here was the early signal. Right, they did come down aggressively, but the markets did go up. Okay, there was a bit of deviation there, but eventually it did kick in, and markets did sell off, and the rate cuts came in for good, and inflation was getting beaten down pretty hard, which is good. Eventually, and we had this period here where it didn't necessarily no recession there. We had cuts coming down again. We had a rise, okay, and then another decline, and then the market kept going up. All right, so it didn't really work there. Worked somewhat here, okay, when the recession kicked in. It didn't play out here, didn't play out there, because didn't have any unemployment rising. And then we had this obviously the dot-com bubble, and they cut and then boom, sold off heaps. And same thing with the GFC, is they cut here. So it was a 5.25 to 5, I believe. 5.5-ish to 5. So it was around a 50 basis point cut, that one. And the markets just went chum. As you can see, just sold off heaps. And yeah, to face the sickness, they slam rates, the market's freaked out. And yeah, we're about to cut. And will it play out the same? We'll have to wait and see. But that's all the times I just showed you. My recession indicator isn't working for some reason. I don't know why, but it still isn't planning on working today. So I'll just draw it out for you to show you what happened. And that is the Fed funds rate. So that is the video. We just talked about the rate cut probabilities. And the calendar, of course, seeing that projections and forecasts are for a 25 basis point cut, not 50. But the CME Fed Watch tool suggests that 50 is in favour for tomorrow morning. It'll be very interesting to see who is correct, because it's a very mixed bag. Different banks saying 25, some say 50. Yeah, JP Morgan's on the 50 side and Ray Dalio's on the 25 basis point side. So yeah, it's a tug of war, essentially. It's anyone's guess. But it's how the markets react is what is important. Because, yeah, ultimately it's the markets will catch up to reality. And when there's bad news, especially some hawkish tone from the Fed, so it's not as rosy as they think. But I believe they're going to talk down the bad weakness in the job market and that, and they'll talk up their efforts in inflation, and they'll just say it's just a cooling labour market, as they've always said. And the, rate cuts will come steadily and slowly, and they'll just cautiously act. And his power will become a dove. He usually does. Okay, there's nothing going to be pretty surprising at this conference, but who knows? We'll wait and see. And we talked about the Trump's coin. Okay, that's don't invest in that. It's a scam. Stay away. It's absolute rot. Just please do not do it for the life of you. You will get roasted by people around you if you do lose on this thing. But if you put $50, $100, that's like a bet, and then you're not going to cry over it. Unless you lose that money, it's not going to be the end of the world for you. So you just be cautious there. Just sit on the sidelines if you're really conservative, and just common sense, just stay away from it. Any coins that are promoted by these celebrities, it doesn't matter who they are, you've got to stay away from them, okay? Just for your safety. And because there's no guarantees, all right? There's no insurance. There's no, it's a bit different to sports betting, okay? This is win or lose. There's no in between. Get your money back if you're slightly wrong or slightly right. You just lose it all right? It's just a pump and dump. It just comes fast up and then fast down. Or if this thing does sustain itself for a little bit of time, eventually will sell off. Okay, the guys that get early allocations will sell on retail. They will dump on you like your exit liquidity. Right, if I mentioned this in the previous videos, you are exit liquidity to these people. That's all that you are. So just don't do it, please. That's that one. And we have some charts as well, like Bitcoin, futures markets, and seeing that the NASDAQ could fill its gap. That's why I see the market's rallying a bit higher after this rate cut and conference. And yeah, that is that. And I know the Fed funds rate and what really happens historically after rate cuts. It's a mixed bag, depending on if we're going into a recession or not. If we're not, then markets can just ignore it and shrug it off. It has happened previously. And markets have sold off before rate cuts have arrived and then rallied way after them, like in the mid-60s and early 80s, right before the big recession. So, yeah, it's back-to-back period. And then, you just don't know what's going to happen. Even in the early 70s, right, they had to drop rates, and they made a mistake. They had to raise rates again. So the inflation took off, Yeah, surprisingly, so that was a big negative for the markets as they didn't see that coming. Uncertainty, markets hate it. So yeah, this uncertain period, and I showed you the chart of that as well on Twitter. This is the most uncertain time since 15 years, I believe. 25 basis point and 50 basis point cut. It's very, very uncertain what's going to occur. So it's going to be very volatile in that regard because it's a motion-driven market at the moment. And the stakes are high for the big investors. And yeah, I have to wait and see what happens. It'll be very exciting results. I will not be awake to witness it live, but I will see it in the morning after it has occurred. So if you like this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you in the next one. Cheers.